Hi guys, so on this video, I'm going to talk about Tech Supercycle. Now, this is a theme in which you invest. I believe that you're going to make really good money. Here is my portfolio, which I have been running, and this is outperforming almost 99% of mutual funds by a lot. In fact, it has beaten Nasdaq. So Nasdaq has given, since the time I've started this in January, Nasdaq has given a 10% up move, but this fund has given a 30% up move. What I'm doing is that I'm playing with the Tech Supercycle. On this video, I'm going to help you understand what that Tech Supercycle is. Why is it that I'm going to put in a lot more money into this cycle? I'll back my analysis with data, logic, and everything. And in case you're keen, then what kind of strategies you can run, what type of companies, stocks you can pick. So I'll do a quick commentary on that entire spectrum, right? So let's begin. And first and foremost, the meaning of Tech Supercycle is that a big investment cycle has come in tech and it is only going to accelerate. Now, there are two ways in which investments are done. One is that you might be hearing that companies like Microsoft, Tesla, Google, all these companies are putting in a lot of AI-based infrastructure. So that is a cycle of investment that they are putting. But the thing is that this is not just a one-time cycle. They are going to keep on putting a lot more money over the next 5 years at least. I'll again pack it up with data. And this is sustainable investment which is going to come in this industry. And as a result, as investors, you stand to make a lot of money. Now, natural question comes that something similar has happened in the dot-com crash also, that a lot of money was poured in. Then what happened? There was a crash, right? So let's start discussing with data. Let me not throw around my opinions. And the first key thing that you need to understand is that how much money actually came in during the internet cycle. So the internet cycle, one could argue, started from approximately like 97, 98, right? And this was the number, right? So for example, in 98, the total investments in the internet 1.0 cycle was USD billion 32. So $32 billion were invested. Then it reached like almost 3x, right, to 2000. And this is where the internet bubble kind of popped, right? And after that, there was less and less and less and less and less. And therefore, one could conclude that on internet-based company, this was the bubble phase, right? So this entire phase when the investments tripled, okay? So this was regarding internet revolution or internet 1.0. But something very different is happening right now. And this is the reason why it is being called as Tech Supercycle. And here, if you look at the numbers, right? So the numbers I am quoting from 2025, okay? So just from semiconductors alone, there is close to $700 billion in investments, okay? So in the previous chart, look at the billion-dollar investment. How much was it? It was very less, okay? 100 billion at the top. And this is a semiconductor where $700 billion of investment is being poured in 2025. So this is not hypothetical data. Now, what about something like AI, right? So this is AI, this blue chart. Now, again, we are sitting on 210, $220 billion just on AI. That's two. If you look at some smaller segments like CRISPR, space tech, health tech, vagera, consumer tech, if you keep on adding, then again, the absolute numbers look very impressive. Now, that's not the end of the story. The story is that, see, here, it's the acceleration or expected acceleration. Now, this is not without the plan. For example, if you consider the semiconductor industry, there is a very clear growth story in terms of the money that the US government is putting. For example, recently you would have heard that US government invested in Intel, right, which is a publicly listed stock. Now, US government typically does not buy publicly listed companies, but very recently it did it. Then after a month, Nvidia forged a partnership with Intel, right? And it was a dead stock and it bounced like anything in the last 1 odd months. Okay. So what is happening? That there is commitment from private players, there is commitment of capital from governments, and this game is being played globally. Okay. So long story short, right? The first key difference between like the Internet 1.0 or Tech Revolution 1.0 was that it was very internet based and it had very less capital cycle. So this is the reason why analysts are calling it a tech super cycle. In fact, I as an investor, I'm putting in a lot of money. I will be building another $1 million portfolio related to these tech stocks. I'll start that portfolio soon. So in case you guys are interested, you can check out my community. It's a global investment community. So I'll mostly buy global stocks there. My portfolio has been performing really well. So in case you are keen, you can check out the details. Okay. So this is one. I hope the cycle is clear. So now let us quickly understand that when these type of cycles come, what ends up happening is that the stock price kind of follow this path, right? So they will go up, they will go down, they will go up, they will go down. But there is a very strong correlation between capital expenditure cycle and the stock prices. For example, now Nvidia is a proven story, but the investments in Nvidia and the type of R&D spent budgets that they made, they started making it like maybe like 2015. Okay. But Nvidia stock started to run after 4 years. So there was a lag. But now Nvidia stock prices are kind of leading its capital expenditure cycle. But if you play this entire story from an industry point of view, right, that okay, large chunk of money is going to come in a particular industry, then stocks in that industry will kind of follow that, right? I mean, if it is not a proven company, then typically the stock prices will lag. Once the company is proven, then they will start leading that cycle. Okay, so what is happening in Nvidia now? So long story short, we are in a tech super cycle because a lot of capital expenditure is being done in this industry. This is not slowing down. This will accelerate till 2028. And there are many stocks which are currently behind the curve in terms of stock prices. So there is a good chance for investors to make money. This is not as speculative as people think. Okay. Now, this is also backed by the expectations of earnings growth. People keep on calling that, you know what, okay, Internet 1.0, there was a like Internet crisis, dot-com bubble crisis, dot-com bubble crisis, AI also similar, okay, AI bubble crisis, AI bubble crisis. But what people fail to mention is that in the latest results that Nvidia posted, their earnings grew by 51% CAGR for a company that is at $4 trillion market cap. On top of that, if you just take a look at the Intel story, right, that I spoke about. Now, what happened with Intel? Well, the US government put in money, then Nvidia forged a partnership. What does this tell you? Well, what it tells you is a very interesting trend that governments have jumped into this industry super tech race. Natural question comes that, okay, why is it that the US government is putting so much money on chip stocks? Okay. Well, because Chinese government is putting a lot of money in Chinese tech stocks. Now, how does that matter? Well, what ends up happening is that, see, the way capitalism works is that capitalism should be free market. The companies, the government should make like, easy laws and put in like good structure systems for these companies to thrive. But what China has been doing is that China, for example, if they are manufacturing a phone, right, let's say like this phone, they are manufacturing, they will bring down the cost of this manufacturing to extremely competitive prices. For example, if China is making this phone at like $100, other countries, their base price would be like $150, $200. There is no way, like for a large chunk of products that are coming out of China, there is absolutely no way that companies across the globe can compete them in terms of bringing down the manufacturing cost. So you need to ask a better question that, okay, how is it that Chinese are able to do this? Well, now data is not very clear on this, but speculations are that many of these Chinese players who manufacture like whatever, like guitar or like lights or like Chinese Diwali lights or phones or whatever it is, they are supported in a big way by the government. For example, they will have very relaxed laws. They will not have to go through a lot of scrutiny. Their compliance burden will be reduced. So it's not just efficiency, but also pouring in of capital, वगैरह वगैरह दुनिया भर की बातें, right? So therefore, they are able to lower the cost of production and make Chinese exports extremely competitive. Now, for non-critical industries, like let's say one could argue phones, right? It's not that big a deal. But when this starts happening, when government starts intervening in the private players' businesses, then some Chinese company, for example, DeepSeek, might outcompete even Nvidia. Okay, so this is a possibility if the US government does not step up and starts doing the same. Now, once Fed or the US government jumps into the equation, they have almost infinite money, right? A private company has finite money. But when government checks in and starts supporting companies like Intel or starts supporting companies like DeepSeek on critical sectors like technology, because they cannot be left behind, now then that really amplifies the cycle, right? And that is what my prognosis is might happen on this AI supercycle, tech supercycle, right? So therefore, I'm building a big portfolio. Almost 80-85% of the capital I'm investing these days, it's going into these type of stocks. And this has been very beneficial for me. But I hope that 2 points are clear, that what is the meaning of supercycle, how capital expenditure from the government is going to push up this cycle more, because now it's not a war between Nvidia and DeepSeek. It's a war between US government via Nvidia and Chinese government via DeepSeek. Okay, so this is what is happening at a macro level. So then comes a very natural question that, okay, great, you explained the concept of super cycles, and now I'm very interested in buying like US stocks or China stocks or India stocks. So can you just tell me, like, I mean, which country is the best in terms of buying this? Okay, so let's start applying a little bit of our brain. Okay. So here is a very interesting data piece that approximately there are 53,600 listed companies in the world. 53,600 listed companies. Now, if you take the top 10 listed companies in the world, 6 of them are in the US. Now, guess the average profits or net income of these 10 companies. Well, it is close to $60 billion in average. Okay. But on the flip side, if you take rest of the companies, right, which are 53,500 or 90 odd companies, their average profit is much less than $10 million. So on one hand, we have like average profits of these multi-baggers, big players around $60 billion. And on other hand, the smaller players are really small. Okay. So long story, what is it that I'm trying to tell you? Well, 2 points. Number one, that out of these 10 companies, 6 are in the US right now. They make crazy profits. Now, out of all six companies are tech companies in the US. So then a natural response comes that, okay, great. So this is like first layer of investigation that if I want to make money, stay with monopolies because tech is monopolistic by nature. So you have to go and buy big companies in the US which are playing this tech super cycle. Of course, Nvidia ends up investing in companies like SoundHound, or Nvidia ends up investing in a bunch of smaller players. Those small caps can become rockets, but Nvidia is the baseline on which all these companies are also growing, right? Now, many of these large cap companies, Nvidia, Microsoft, Google, they are doing a series of different things within the tech sphere. For example, Google these days, it's looking to amplify its language learning program also. But a specialized company in this space is Duolingo, right? So now I've recently purchased that stock. Now I feel that that can become a vertical AI leader, right, at some stage. So I will build more positions with time. So you can buy these secondary companies, right? Why? Because Google might touch upon language learning, but it will never be a specialist in that area. So second is the way to do this, right? That you play like specialist vertical AI players, which have a very niche focus, very niche brand like Duolingo or SoundHound, right? So this is two. Third way of investing in these companies is that you go in unexplored territories because the ultimate objective of tech is what? Well, it is to expand human horizon, right? For example, if reaching to space is what? Well, it was exploration of tech, right? So tech enabled us to do it more than anything else. Now, something similar is happening in energy generation or CRISPR technology, and AI is impacting that. So you pick these new industries which are unheard of. So then comes the fourth way of investing in this company, which is to target new geographies. For example, many people ask me that, hey, can we target like China stocks here? See, guys, basically, when you go to the US and if you read the mandate of any company and if you ask Google board, right, that, hey, what is the objective of Google? They will not say that, hey, build best tech and this, that stuff. No, it's the maximization of shareholders' wealth. This is a common statement that you will read anywhere in like US corporation charter. Okay, so every company in the US listed company, its prime mandate is to grow shareholders' wealth. Okay, CEOs change because stock price does not move. So this is the reason, one of the foremost reason why US CEOs get changed very frequently. Okay, but in China, that's not the goal. In China, what ends up happening is that the state supports the private corporations. Huawei is one of the leading tech players in China, but it is not a listed company. It is an unlisted company, majorly held by China. Okay. Now, why is it so tightly held by the Chinese? Because right now they don't want to divulge their technology and all that stuff. Okay. So they are quietly working towards that. There is a lot more mandate from the state that influences the corporate entity. So the private and government arm in China is not exclusive, right? I mean, it's not as if that they work differently. In US, there is a lot more freedom. What are you and I doing, right? We are equity investors in these companies. So we should go with companies where the mandate to a private entity is wealth maximization. Now, well, that is not possible in China because let's say a company like Jack Ma's company, Alibaba, right? If it goes too big, then Chinese government will come and tell them that, you know what, boss, we created like a positive ecosystem for you to flourish in the initial phases where we supported you so much. Now you are making money. Now you have to do what we tell you to do. Okay. Call it dictatorship, call it like a partnership between government and private entities. The mandate in China is that the private players are not there to extract maximum profit, which for you as an equity investor is not a great deal. Okay. I hope this complicated point was sensible. So long story short, my mandate in terms of investing in AI stocks is that you have to look at 4 or 5 basic points. What I told you earlier, that large cap companies investing in small cap companies, certain explorative themes and right geography, which according to me is the US, right? What about India? That will we see a lot of tech companies coming out of India? Unfortunately, no. We are in that consumer sphere right now where the top companies that have come out of India are, let's say, right now, Zomato, Swiggy, they are not necessarily tech companies. Yes, you can pass off anything as tech, but that does not fulfill the criteria of structural tech, right? So that will not be a part of this AI super cycle, so to say. Of course, they will benefit. For example, if Zomato starts drone delivery, now that would be exciting because they will be able to lower their cost dramatically, right? So that will benefit from tech. But Zomato is not a company that is doing tech per se. So if you want to do tech super cycle investment over the next 10 years, which I highly, highly recommend you to do, you have to learn US stock investing. I hope that this was useful commentary. If it did help you, do consider subscribing to the channel, and I'll see you soon.